Shannon, and good evening. We are live. Today is Thursday, the 6th of January, and this is a special webinar for newer subscribers in particular, but of course, everyone else is welcome to join. The goal of today's session is really just to get everyone up to speed. I've done a sale, and a number of people have taken advantage of that. I want to make sure everyone's on the same page so you can get the maximum value from Alphatrends this year. And a lot of times there's a lot of little subtleties. A lot of people don't read the frequently asked questions or or know where to find things. So the goal here today is to let you know where to find everything, some of the strategies that are used. We've got some questions. I think I will probably cover them all, but let's just jump in and get started. So on Alphatrends, number one, first up, you can find all of the newest content below all this garbage right here. Stock trading ideas for tomorrow are right here. You will find every single blog post right here on the front page first. On the right here, if you don't have Twitter, you can see everything that I put on Twitter right here on the right. So you don't have to have Twitter, and I don't try to put timely things on Twitter. What I try to do on Twitter is to put ideas out there that maybe we're already in, but just to share with the public and educational stuff. I don't always double post it onto Alphatrends, so be sure to keep an eye on that. You don't have to be on Twitter to follow that. Let's talk about the trading ideas, though. So this is the one for tomorrow, and first of all, actually, as well, on the upper bar right here, you can see the next webinar will be next Monday. Every other Monday, we do a live webinar. That webinar is on GoToMeeting. It's at 3 p.m. My time, 5 p.m. Eastern, every other Monday. And the purpose of that is to go over the stocks that we're already in, look at new stocks, and then get to your questions. Those questions should be the ones that are educational questions. Questions about individual stocks, that's what the forums are for. So let's just, we'll go back to the forums in a moment. But for right now, something that's really important is every single day on this sheet, if you view it full, you'll see a few things. One, if there were an official swing trade idea, I will put them up here. Typically, we have one or two open, and then maybe another one or two that are, looking like they're official swing trades for the next day. What do I mean by an official swing trade? It means to me that I have the confidence to say you can use whatever your risk amount is, your full risk amount. If your maximum risk amount per stock is $500, then you should risk $500 if you're comfortable with it. Whereas a B list, this section in here, EXPI and OWL, these are considered B list ideas. I don't have the same type of confidence in them, so I suggest that you risk only $250 or half of whatever your risk unit is on those. Now, these are simply suggestions. I'm not here ever to tell anyone what to do. People who just say, hey, I'm going to short it at 1410 and put my stop at 1448 or 1446, you're misusing this service. I want to give you ideas, give you the reason for those ideas, have you look at them yourself and agree whether or not it makes sense. The time frame is simple. It's always the same. It is a swing trade service. It is not meant for 100% of the capital that you have in the market. It's meant for the swing trading portion of your account. If you have a $1 million account, maybe you have $200,000 you swing trade with. I don't make suggestions as far as how much money you should commit to any strategy or any individual stock. We all have our own unique risk variables and reasons for doing things. That's up for you to decide. But once you decide that, an official swing trade is a full risk unit. A B list idea, that would be these ones in here, are a half of a risk unit. And then the other names that I consider bonus ideas, C list ideas, stocks like CAR, like OPK and TSM, they're not quite ready to go. They're worth keeping an eye on. Sometimes you can make them into a trade your own the next day. I saw that today someone, I think Conan made one of these trades his own on the C list idea. So to me, it's always about risk management. I say it all the time, risk management is job number one, and it's not just a phrase to me. It's really a way of life. It's how I've been able to stay in this business full time for 31 years by managing risk obsessively for the time frame that I engage in. Now, if you're saying to yourself, well, shoot, I'm a longer term holder, what am I doing in this service? Well, what I happen to be very, very good at is finding the correct entry point. That is really my specialty, and mainly because I do use multiple time frames. I'll look at typically up to five, actually up to 8 or 10 different time frames, but a minimum of 5 time frames is what I'm looking at to come up with the ideas and determine where the risk is, etc. So that's how I look at it. And on the question, I always get the question, how do I find my ideas? How do you scan for ideas? It is always the same. It is a manual process. Each weekend, I look at my master list of stocks, which currently I have to get it down a little bit. It's about 1,000. And I look at those 1,000 stocks. I'm not looking for longs. I'm not looking at for shorts. I'm looking for things that I've trained my eyes to recognize over the last 30 years. Some of those things can be quantified. For instance, for a long, I want to see the stock in an uptrend above the 20 and 50-day moving average. For a short, I want them to be below the 20 and 50-day moving average. I don't want there to be a recent large move. I want there to be a consolidation, a place I can manage risk. So I manually scan for these things, and then I drill down to shorter and shorter term timeframes to look for where the low risk opportunities are. So each weekend I look at that list of 1,000. I drill it down to about 200, 250 that I look at every single day. That 250 list is, most of them I know I'm not going to trade that week. It's not my goal to trade every single one of them. But by looking at a lot of components in the market, it allows me to get a better feel for where the strength is. I don't need to see the XLE breakout. I might see a couple of energy names breaking out first, and then I'll look at the XLE. So to me, it's a bottoms up approach where I can really get in tune with the market. It's not something that can be duplicated. I mean, I suppose it can be, but again, I've been doing this full time for 30 years, looking at charts like this every single day. This being my 31st year, actually, because I started in 1991 full time. But the point is, I'm looking for opportunity. It's not a scan. I get that question every single webinar. It's not a scan. I promise you, it is a manual process. I use FinViz to point out this. And here's FinViz, by the way. What I have is I just have something. This is my preset. It's called my, and I think I put the wrong one on there today. I go to official, and this is what you see every day. The sector, the country, the market cap, PE, price change, and that's not even correct because it should have the short interest. So something's going on that's goofy in here. Where is it? And you can see I've messed around with some scans in here, but I never, ever use them. I mean, I promise you that. People are always saying, well, what scan should I use? But what I look for, and I just manually enter the symbols in here. I grab this information and I attach it to the bottom of this. So this, on all of these stocks, what we typically have, and for some reason it got screwed up today, is always has the earnings date. We want to be aware of when earnings are due. If the earnings are due, today's January 6th, if the earnings are due January 7th, you don't want to be buying the stock, or January 8th. You don't want to hold. I never suggest holding a stock before earnings. So always be aware of when the earnings are due. You can see that here, and you can see it on the top of every single chart in the videos. The volume, I put in, short interest and that sort of thing. But so the C list ideas are all included in here, as well as the B and the A list ideas. But again, there are no A list ideas for tomorrow, and that's simply a function of the market. I'm not going to just come up with ideas to come up with ideas because that's what you guys pay me to do. What you pay me to do is to find you the low risk, high probability setups. And my job is to interpret the market action. That's what I specialize in. I'm your translator, basically, for what's going on in the market. I've trained myself to listen to the market. And that's a key component. A lot of people will do scans and tell you, hey, I found this great stock. I'm not here to order things from the market. I'm not that arrogant to think the market's going to comply to what I want. There's nothing wrong with having scans and reducing your workload if you don't have the skill set to go through a large number of stocks in a very short period of time the way I do. But what we're looking for is low risk opportunities, and I like to rank them. A list, B list, and then everything else. And, I don't catch every winner. I've never claimed to. I don't trade every single one of these names. Sometimes I miss a trade just like you do. There's no perfect way to implement this. And I encourage everyone always make the trade your own. If you're a day trader, someone, I forgot the name, maybe it was Matthew. When we opened this position on EXPI at 33.05 2 days ago, Matthew said on Twitter, "Hey, I traded this, and he made it a day trade. And here, he made maybe $1.50. There's nothing wrong with that. We're still looking at this as a swing trade opportunity." So, anyways, I'm going to go through this stuff right here. One, don't chase gaps. Never, ever chase a gap. We don't set stops before the market opens. I have never, ever in my life used a buy stop order. I never will use a buy stop order. I will set stops, on my position if I'm away from the market, but I typically don't. I set a lot of alerts instead. So don't chase in either direction. How the stock triggers is really important. We spoke about that short sale today in TDC that it had dropped $1.40 in the 20 minutes prior to hitting the official entry point. I didn't take the trade, and I encourage people not to take the trade because it's always about how it got there. Don't chase the market. You always have to ask yourself and answer these two questions. Where has it come from? Has it been extended? Did it just, the majority of the stocks that people ask me about are stocks that are already up 10% in the last 3 days, or now they're trying to short stocks that are down 10, 15% in the last 3 days. We need to anticipate and say, okay, it's coming from a low risk, from a tight consolidation. Now this is the type of stock that I'm looking for. Then I look at it and say, where does it have the potential to go? I'm not looking at price targets. I don't do price targets, but I have a level of interest where the stock might travel to justify my risk reward. And if it looks like the risk is worth the reward, then I put it on as a trade. So the only time that I ever adjust stops, I got a question midday yesterday about a stop or a price target. I don't tinker with them during the day. If you want to mess with the stocks and change the stops and where you want to cover, that's entirely up to you. I encourage you to do so, but I try to keep it consistent. The only time that I change any of the stops are in the midday video or in the end of day video when the market's closed. All the ideas are suggestions. I want you to make them your own. Again, if you're a longer term trader, you might look at APA and say, hey, I like that one for the next 6 months. Great. Here's how to enter it on the shorter term time frame. Use a different stop. Adjust it for your needs. Or maybe you're looking at it, as Matthew did with EXPI, and saying, hey, I'm a day trader. I want to day trade this thing. Beautiful. That's what you should do. I'm not here to be all things to all people. I specialize in swing trade setups, and my strength is in the entry and managing risk after that for a swing trade time frame. If your time frame is different, make your own adjustments. If a stock hits a stop, so for instance, if I say short owl below 1411 with a stop of 1446, if it goes to 1447 and then drops to 1410, don't take that trade. The risk reward has been ruined. So if it hits the stop, long or short, prior to actually hitting the entry, the trade is invalidated. It is off the list. That is a 100% of the time, unless I change it in the midday video. As I did with one of them yesterday, I think was XPO. And that was a nice one, which was good because that one worked well. So the risk reward has changed, so don't do it. It's not a good idea to buy a stock if the 5-day moving average is declining, or if the 5-day moving average is advancing, you don't want to short it. That is a cardinal rule to me. Don't fight the direction of the 5-day moving average. Also, stocks with a declining 50-day moving average, I never buy those. I never suggest buying those. The only exception was the January effect. You won't see me do it all year. Again, I will not tell you that you should buy a stock with a declining 50-day moving average. They're guilty till proven innocent. And even a 20-day moving average, I won't fight those trends. People always ask me, hey, Brian, what do you think about Square? What do you think about Teladoc? What do you think about Roku? Hey, maybe they're good companies. I don't care. We're here to make money trading stocks on a swing trade basis. They're guilty till proven innocent. It doesn't mean they can't bounce, but they're in downtrends. Let's use the trend to our advantage, the path of least resistance. So don't fight the direction of the 5, 20, or 50-day moving average. No one should be trading all of these ideas. Adjust it to your time frame, your risk tolerance, adjust this position sizing. Just because I don't have any official swing trade ideas, maybe you loved EXPI and you put your whole account into it. I can't control what you do with your money, or I only make suggestions. I'm not a financial advisor. I don't have a license to tell you what you should do with your money. I'm showing you, here are the reasons for maybe entering a trade. Here's where I would cut the risk, loss if it made sense, and move on from there. So just don't fight trends. Find the ones that make sense to you. Don't set stops until after the market is opened. I cannot tell you how many times each year this saves us from throwing a stock away. We'll have maybe 4 open positions, long, and the market will gap lower by 1%. People panic and throw all their stocks away. And guess what? That's the low of the day. Instead of setting your stop at the open, we wait. Let's say our stop is at $30.12 in EXPI and it opens at 30.15. Give it about 5 minutes. If it trades a new high after 5 minutes, then cover it, if it's above the stop. Otherwise, we let it settle down. If it gets back below the daily volume weighted average price, we raise our stop on that short to above the high of the day at that point. If instead it gaps lower and our stop was, let's say, 30, it opens at 29.60, it makes a low of 29.58 after 3 minutes of trading, and then starts to rally and hold above the daily VWAP, well, then we'll lower our stop to below the low of the day. So don't set your stops until after the market opens. S2 and R2 are great for taking a piece off. A lot of people say, where do I find daily S2? Where do I find daily R2? What are these things? They are pivot analysis. And what I'm going to do quickly is just bring this over here. And I use TC2000 as my primary trading platform during the day. So I just saw GME, by the way, is up after hours. Let's take a look at that. It's just kind of what a goofy ass stock this thing is. The shorts are just getting burned over and over again. But anyways, back to so for TC2000, I have them. They're in here. This is the pivot for today in AMC. This is R1. This is R2, S1, and S2. Google it if you don't know what it is. Google pivot analysis Alphatrends. I've done a video about it. What you do on any decent software, I'm not familiar with all the charting platforms. So, when people ask me, hey, how do I find that on Ameritrade? I don't know. But on TC2000, just type in P. Well, let's do it. Let's go over here to the 10-minute time frame where I don't have it. So I will add pivot, PIV, V, and pivot points. Boom, there it is. So these are the pivots for today. Now, tomorrow they will change. You will see them different. It's a mathematical formula. Again, Google it if you're not familiar with it. It's easy enough to find on every single trading platform, on any decent trading platform, or there's calculators on Google where you can, type in the previous day's trading and find that information. So, it's a pet peeve of mine, especially on Twitter, when people just don't do any work. I've got the wrong thing there. I'm trying to show what? I'm trying to show this. Here we go. So anyways, back to this. S2 on the short is where we want to cover generally a third, and R2 on a long. Now, here's the other thing about daily R2. If we're looking at a stock that's long, let's say we're looking at OWL that's short below 1411. Let's say, instead that daily S2 is 1408. Well, if you shorted at 1411 and daily S2 is 1408, then you have a decision to make. Do you want to trade it for 3 cents? No, of course you don't. So maybe instead you adjust it to daily S3 or you don't take the trade. It's always about risk reward, and you have to have a little bit of flexibility. So these little guidelines are on here every single day. You'd be surprised how many times people ask me, "Hey Brian, what do you think about Roku? It's below declining 50-day moving average. It's guilty till proven innocent. Doesn't mean you can't make money, but I wouldn't trade it. I don't think you should either." That's my standard answer for any stock. So on the forums, again, accessed right here, there's three things: bonus ideas and notices. I used to put the C-list ideas in here. Instead, I put them in the videos, and then I'll just, keep an eye on this once in a while when I say there's a special new subscriber video or some kind of announcement about, the volume wasn't large enough for Avid, so take it off the list. The questions for Brian are exactly what they say here. No one reads this. So I'm not gonna read it to you, but it's not meant for educational concepts. If you have a question about, hey Brian, why would we anchor the VWAP from here versus there? That's a webinar question. Send those questions to 1bshannon@gmail.com. And I will tell you, if you ask the question in here, just like this question, full risk units, how many trades per year? Great question for the webinar. This is not a question about, hey, what do you think about a certain stock? So the question is about stocks that you want me to ask about, like OMI. And please put some thought into it. Just don't say, what do you think of OMI? And this person didn't. But say, hey, I'm thinking about this stock. Show me that you've put some thought into it. I can't help you unless you put some work into it yourself. You can't just say, hey, and then at the same time, the other thing is sometimes people will run through their whole watch list and say, hey, Brian, I'm looking at these 8 stocks. What do you think? No, sorry. I'm not here to do all your work for you, looking at your stocks. I've already done, the work of what I think are right. But, if you have a question in a stock you want some feedback on, that's what it's meant for. So that you can say, hey, here's what maybe someone with a more trained eye is looking at it, something that you might have missed. I'm happy to do that. And again, just because I might not like an idea, I'm very particular about my entries because my entries are my strength. A lot of times I might not like them. So I will tell you that, but it doesn't mean it might not make money. I just maybe view it as, it's up 8% in the last 3 days. I like other stocks better. Let it settle down type of thing. Down here, stock ideas you want to share. I typically don't talk in here. I typically don't respond because these are not questions for me, but these are people who want to share some idea that you've run across. Please be aware, I have no problem with people sharing in here. I will often look at the symbol and then that's it. I almost never read what people are saying about them because, and that's not disrespect to anyone in this room. It's the same thing anywhere. If I see, George Soros likes a stock, I'll look at the stock. I don't care what his reasons are. I look at the chart and let the chart tell me. No matter who it is, that I approach it the same. So, don't be offended by my saying that. But I'll look at it and I try not to keep my make any comments. Instead, let it stand. But please, put us. It has to at least have a stop. Don't just say, "Hey, I like this stock for the next 6 months." Big deal. That doesn't help anyone. Go on CNBC and tell people that and go back in 6 months and tell them how smart you were, but it ran down, dropped 40% first and you've got no responsibility. Take responsibility. The other thing is you never know who is mentioning these things. I'm sure there's a lot of really smart people in here, but I don't know what your experience is. I know some of these people, but Dave is a newer one. I think Matthew is. I don't know what these people are looking at. I don't know what their experience is. And I'm only interested in looking at the stock based on the way I look at stocks. So for instance, on OMI today, someone said, hey, I have the chart attached. The chart wasn't attached, but I said, listen, there's no reason to attach the chart because I look at my charts. I can only look at it through my eyes, through my lens, the way I'm used to seeing things to be able to provide value. So that's the forums, resources, new users. Please read this stuff. I put some work into it. There's good stuff in here. The frequently asked questions. You'd be surprised how many times I get the same exact questions in every single webinar. And, they're right here most of the time in the frequently asked questions. I'm not going to read them all to you. Why do you often suggest more than one level for stop losses? Good question, right? These are what's the most important aspect to become, which time frame is most important? There is no most important. Do I make specific ETF leverage recommendations? No, I do not. I do not make any options recommendations either. How much price focus on price targets? I don't do price targets. The price target for a long is higher. The price target for a short is lower. Our job is to manage risk. I have a level of interest, but it doesn't mean it's a price target. It means that I can justify taking the trade based on what my perceived risk reward is when I get into the trade. That's it. The three goals of Alphatrends are: number one, to help you make money. Only price pays. I want you guys to get the good ideas from my decades of experience and help you make more money. Secondly, I want to help keep you out of trouble and buying stocks, like AMC that's up 30% in the after hours and chasing it. Doesn't mean you can't make money, but what's the most likely scenario? For a stock to be up 30% and continue up 50% the next day? Not likely, but sometimes it happens. And then finally, to educate. Everything I do is transparent in terms of what are the reasons. Some people will say, well, Brian, what's the track record? I don't keep a track record. I'm not here to sell anyone on performance. I'm here to help you develop your style, your edge in the market for this specific time frame. If you want to go back and track the results, that's up to you. Every single person is going to have them a little bit different. Every single day, I'm going to have people say, well, Brian, you marked it as an entry here, or in TDC, you said you didn't enter it, but I did. And, everyone's going to have different performance. Everyone's going to, look at these things differently. And I encourage that. So to have a track record of made up stuff is just completely stupid. It just doesn't make any sense whatsoever. All the questions, Dan, have been sent in to 1bshannon at Gmail. I'll try to get to your questions, but the priority comes to the email because it was advertised for the last 3 days to send your questions there. And I'm not penalizing you. I'm just letting you know for your information. And you did say if we have time, so great. So anyways, I think I've covered what I need to on here. I don't always talk about, the most popular stocks. I'm not going to talk about Google and Amazon and Apple every day. If I see a low risk setup, great, I'll do that. But I'm here for special situations, swing trade situations. I'm not here to tell you what everyone else is talking about. I'm here to find the low risk, high probability setups with a stop and go forward from there. The time frame, again, is most important. Understand the time frame, and if it's not for you, then adjust it to your time frame. I don't do a lot of shorts. Now, some of you have, most of the people I think in this webinar joined up, excuse me, just this week, and it just so happens the market told me to short some stocks. I'm telling you, that's really the way it is. I was not looking for short sales. I was looking at the market and saying, where is the opportunity? And the number of stocks looked vulnerable. So I suggested EXPI, Yeti, Beam, XPO, TDC, and OWL as shorts. And guess what? They're working great. So our job is to listen to the message of the market. But I typically don't do a lot of shorts. I think that's basically what I had to cover here. So I want to go to the questions from the emails. First one is from Stuart. I have been watching the trading videos. But today's video says no official swing trade ideas for Tuesday. You listed potential trades. So I've answered that as I thought I might with a lot of these questions. Another question is, what's the number of average number of open positions at any one time? I recognize many will be partial. Stuart, it can be anywhere from 2 to 10. There is no average. It all depends on the market conditions. I don't try to, say, hey, I want 3 positions open at all times or anything like that. Sometimes it'll be, 12, and I'll be looking at going, wow, this market's, too healthy. It probably needs a pullback when that happens. Let's see, not the question, good, because that's too long. Any tips or advice on ways to make managing trades over multiple accounts on different execution platforms more manageable? No, I don't. I think you've got to just go back and forth or consolidate them because we're sometimes managing trades on the intraday, taking a third off, for example, or managing stops at the open when it's testing a zone. I find myself struggling to execute my plan on all accounts, combination of taxable IRA and wife's IRA. I don't know. I know that some brokerages, Interactive allow you to pool your trades, so that's maybe something you want to look into, like Interactive brokers will have a master account, and you can trade in that account and say trade 6% of my equity, of the combined equity of the various accounts into this trade, and it'll automatically split them up into hundredths of a share to make sure that they're equally divided amongst the different balances. So that's the only way I know. Let's see. Another one, just very long. In the future, everyone, I appreciate the feedback and the kind words. If you have a question, make it clear where the question is. Is there a link you'll be sending out the webinar? Yeah, I've done that about 5 times, so that hopefully you're in here. I will read the rest of this. If this is something else that maybe we'll cover in Monday's webinar. Can you tell me how many high conviction trades? So again, that has been answered. Matthew says, at the open with a lot of alarms triggering, how do you how have you set up your process to increase the chance of catching a trade that is meant for you? Often too often striking late or missing entirely. So, and that's a thing. So what I want to do, and that's why I like to, put different categories on the stocks, an A list, B list, and a C list. So I'm obviously going to pay most attention first to the A list stocks and then the B list stocks. And, a lot of what I do when it comes to looking to execute trades is to be able to, if it's short owl below 1411, I'm going to set an alert at 1415. And then as it gets to 1415, I'm going to watch it carefully because that's my, highest conviction trade, I guess you could say, for tomorrow, even though I'm not thrilled about it. But I want to know which ones to pay the most attention to. And I realize I'm going to miss some of them. And other, some opportunities just get away from you. Other times, it'll drop to 1398. Then it'll rally back up and then cross back below VWAP, and I'll short there. So oftentimes, if you're paying attention, there's a second entry available on these things. And a lot of times I don't like to get involved right on the open anyways. So that's something that I want to, be sure that, again, I'm not chasing, especially on the open. Let's see. That one was just answered. So questions for tonight. I'm a new subscriber here from Denmark. So questions 1 and 3. So there were 6 questions sent in at once, and we'll get to them all eventually in the next couple, by the next webinar. But let me see. So questions 1 and 3, it says, are the most relevant. One of my weaknesses so this is a question. One of my weaknesses is the ability to buy right at the beginning of the market phase or at a relevant pullback. Could you elaborate how to buy right? I've read your book and I should buy right. This isn't a question for this webinar. This is about how to use the service. That is a question for a normal Monday webinar, and it's part of, and I'll tell you that, it's about paying attention to what I talk about in the videos every day, about using the multiple time frames and, paying attention to where I say, here's where they're aligned. Is the way we want to do it. So question number 3 was, I'd like to know about how you scan for stocks. I've already discussed that. So again, these questions are not questions for this webinar. This webinar is specifically for how to use this service. These are educational questions that are meant for Monday's webinar. So we'll get to those, I promise. Let's see if this one. Question 1, can you explain how you calculate R2 and S2? I've covered that at the beginning of this webinar, so that's been answered. Is it possible to display them, to display these levels above the video that you post? So display R2 and S2. No, it should be on your software or you can go to pivotcalculator.com, I believe, to find them. So you can go to Pivot Calculator and Pivot Point Calculator. Boom, it's right there. If you have a trading platform that doesn't have pivots, it's time for a new trading platform. Your trading platform sucks. And I'm not speaking to anyone in particular. That's just in general. If people are doing part-time trading, how do they track alerts of triggering the trades? Do they set alerts a few cents or above or below the level? I mean, I do that, and I trade full time, and I always enter alerts above or below. So yes. Fourth question: can you please explain the meaning of if it gaps down from stops, then don't throw trade? If stock gaps down from stops, then don't throw trade, but set up stop loss below 5-minute low. I think I've already discussed that one as well, Sam, when I was discussing, what was on the page every single day. That is, we don't set stops before the market opens because they'll often, be the low of the day. And what you're talking about is here, don't set stops until after the market is open. So I've covered that. If it's not clear, please let me know how it could be clearer, and I will answer. Send it back in, and I will answer it in Monday's video. But I covered that at the beginning of this when I went through this. So again, I think that they were all covered there. Tony has a question, and that's not for this webinar either. So let's see what Dan has over here. We don't have to stay a full hour. This is meant, again, as how to use the service. It's not meant to be reviewing stocks or talk about educational concepts. What words of wisdom would you share with a new trader looking to go full time? Also not for this webinar. Apologies, I've missed. There's a way to enable notifications for the forum. I get an email, and that's a good question. I get an email when somebody posts something in there. That's why I can get on there quickly. But if you go into questions, let's see. So here is this unsubscribe must mean I'm subscribed. So there must be something there that says, to subscribe. But I honestly don't know. I think I did it once and that was it. And I get an email. So whatever this is, subscribe to it. Let me see if I unsubscribe. So subscribe for new topics. And it says I've subscribed. So that's it basically. It knows your email and it'll figure it out from there. I'm going to stop this recording because I've covered everything that I intended to cover here. Oh, one final thing, actually. Bitcoin, crypto. This is not a crypto service. I don't talk about crypto. The only time I mention crypto is when I feel like it on Twitter. To have it as part of a subscription service, with a 24-hour, 7-day market, I'm not going to tie myself to that responsibility. So I only mention cryptos when I want to on Twitter. It's a little side hobby that I do with much smaller money. I'm interested in it. I think it's fascinating. There can be good trades in there, but it's not a crypto service. There is no chat room. There will never be a chat room. I had one previously, and it just made me miserable answering the same questions over and over again all day long. So now I will say that I'm going to turn the recording off.